Welcome to Business Middle East, coming to you from Euronews' new studio headquarters in Lyon. In this episode, we look at what lay behind last week's turbulence in the global markets. And in Business Snapshot, we focus on the pessimism overwhelming oil prices. Global markets were rocky due to uncertainty about monetary easing policies in the eurozone and Japan. Mario Draghi undermined market hopes by not confirming his intention to increase quantitative easing in the eurozone. Then investors' expectations of further QE in Japan rose. How did these moves affect the performance of global markets? Let's take a look.
There were high expectations last week in the global markets that the European Central Bank might raise its quantitative easing programme. But ECB Chief Mario Draghi made comments to the European Parliament dampening hopes of a strengthening of the QE programme.
The asset purchase programme has sufficient built-in flexibility. We will adjust its size, composition and duration as appropriate if more monetary policy impulse should become necessary.
European markets ended the week down. Spain's index lost 3.65%. The DAX in Germany dropped 2.85%. France's CAC 40 was down more than 2.5%. Asian markets recovered by the end of the week after data from Japan raised the possibility of an increase in stimulus there. Despite a decade of QE, the spectre of deflation persists. The Nikkei closed up Friday at more than 1%. China's Shanghai Composite Index nudged higher at just over 0.5%.
For more on this, joining us again is ADS Securities Chief Strategist Noor Al-Din Al-Hamari in Abu Dhabi. Welcome, Noor. Despite efforts from the Tokyo government to stimulate the economy, recent data showed that Japan's recovery may be elusive. Why is that?
Quantitative easing sometimes has a negative effect in the long run, especially if it continues for a long time. This might be the case in Japan now. The QE programme had a positive impact on the economy because it emerged from deflation for some time. However, the introduction of a sales tax hike, which is a policy of the Abe government, had a notable negative impact on the economy. Moreover, the government is looking to increase the tax again next year, which may have another negative impact. As for the current QE, it's already large and the bank has intentions to raise it even higher. The economy needs additional stimulus measures apart from QE.
Last week, the markets experienced disappointment after Draghi's remarks. Then a recovery in Japan further increased speculation on QE. How is the market pricing the expectations of monetary easing policies?
There is something really important that everyone should be aware of. The market did not benefit for a long time from the anticipation of an increase in QE in Japan. The QE speculation increased in Japan after the latest remarks from Draghi, who disappointed the markets with no hints of more QE in the eurozone. This is because of ongoing uncertainty about the Federal Reserve's outlook and upcoming key decisions. Therefore, investors rushed back to safe havens like gold, which gained more than 8% in the past 2 weeks, in addition to the Japanese yen and bonds. The most important point here is that the markets always price on future events and not on established facts. This is why shocks are always possible, especially if central banks' decisions are contrary to markets' estimates or if they delay a possible decision on a rate hike. This is the case with the ECB and the Fed.
In the case of increased quantitative easing in Japan and Europe, how would that impact on currency trading and Middle East markets?
Well, raising any quantitative easing program will, of course, increase liquidity in the global markets. But volatility is likely to rise as well, especially in the stock market, and the MENA region is one of these markets, which has benefited from the various QEs over the past 7 years. Therefore, we believe that raising QE in Japan or Europe would increase the trading volume in the region and elsewhere in the world.
Thank you, Noor. See you next week. Standard & Poor's outlook on oil prices is pessimistic. The agency has trimmed its forecast for crude Brent and West Texas. This coincides with the decrease in the number of drilling rigs due to lower oil prices. More details now in Business Snapshot.
المزيد في بزنس سناب شوت.
After more than a dozen major international financial institutions raised their forecast for oil prices last month, Standard & Poor's cut its forecast for crude in 2015. The agency indicated oil prices could take a longer time to recover. For 2015, Standard & Poor's expects Brent crude to stay around $50 a barrel and WTI at $45. For 2016, the price of Brent could rise to levels of $55, with West Texas crude at $50. US energy companies also reduced the number of operating rigs for the fourth consecutive week in what's considered a sign that the continued decline in crude prices has pushed companies to reduce drilling.
That's all for now. You can always visit our YouTube channel, Euronews Business. Thanks for watching and see you next week.
شكرا للمتابعة. طابت أوقاتكم.